Hey, it's Mark Ferguson with Invest for More, and you are looking at the crazy 2-basement commercial property I recently had go vacant. I've shown you a few videos of this property, but I want to talk about this property in regards to a lot of people saying the commercial real estate market is going to crash because of refinances, because of high interest rates. And I'm using this property as an example because I recently refinanced it after my initial loan term was up. I had a balloon payment come due, and I have some bank statements to show you on the difference between what my old payment was with lower interest rates and what my new payment is with higher interest rates. And to give you an example of why I don't think commercial real estate is in as bad of shape as a lot of people say it is. So I'll also show you some of the cool parts of this building while we talk about commercial real estate financing and show you these bank statements and my payments. So this is a property I bought in 2017 for $110,000. It was one of my first commercial properties I ever bought. I saw it on the MLS and it was super cheap. And it was one of the main reasons I got into commercial real estate from residential. So I had bought quite a few single family homes up to that point, but they're getting more and more expensive. It was hard to cash flow with them. So I see about buying in other markets or buying other types of investments, and this commercial property came up for sale. Now, it was a smoking deal, I'm not going to lie. I wish there were still smoking deals like this around, maybe once in a while, but commercial real estate just is not as little known as it used to be. So I ended up refinancing this property in 2019, got a loan for $175,000, which was 75% or 80% of the value, which shows what kind of deal I got. Now, during that time, I had leased this property back to the seller who sold it to me, and he actually leased it back from me until earlier this year, and that's why it became vacant. And so we did almost no work to it either. We put on a new roof, but that was covered by insurance. And we put in a new furnace, which we did cover at our cost, but it was a pretty good investment. So the idea that commercial real estate is crashing comes from these commercial loans. So when I got that loan in 2019, it had a 5-year balloon payment. And what that means is in 5 years, that balloon can pop and explode, and everybody goes bankrupt. No, not really. What it really means is the loan is due in 5 years. So a balloon payment is the time when that loan is due. Now, that loan actually had a 25-year amortization period, which means I had 25 years to pay it off, but it comes due at 5 years. So when the loan comes due in those 5 years, you would still owe quite a bit of money on the property. And that's where this idea that the commercial market is going to crash comes from, is that there are all these commercial property owners who have loans coming due and interest rates increased significantly. And so they won't be able to refinance their loans. They'll be stuck. They won't be able to sell the properties, and they're all going to go into foreclosure. The banks will take them back, and the whole thing will just come tumbling down. Now, I don't agree with that, and I'll go into that later, but I've also been told over the years that the residential market is going to come tumbling down and crash as well. And that idea comes from the fact that people just think prices are too high, or that houses are unaffordable, and that the market has to crash because of that. But in the past, high prices and unaffordability has never, ever caused a crash. In fact, other countries have housing 2, 3, 4 times more unaffordable than the US. They haven't had market crashes. What causes a market crash in residential real estate and in most real estate is massive overbuilding coupled with awful financing. So in 2008, we had massive overbuilding, and the overbuilding was caused because so many people could buy houses. Sometimes people with a 500 credit score were buying 2, 3, 4 houses at a time. It was the Wild West times 1,000. It was crazy what people were doing. Banks were giving out 100% loans on, refinances, above and beyond what a property was worth. It was just insane what was happening. And because there was so much money and so many people could buy houses, builders were just building as much as they could. Well, it turns out there wasn't that much demand for housing. They were building more houses than there even were people, and it all came tumbling down. Well, the opposite is happening now. There's too little building, and financing is actually rather strict. Since the crash, there are many laws and policies put in place to stop that from happening again. So I don't see a residential crash happening anytime soon. A lot of people think high interest rates automatically make prices go down. That's not really true either. In fact, there are multiple studies that show that's not true. The issue is, high interest rates can curb demand and decrease demand, but also decreases supply because people aren't going to sell if they don't want to buy with a high interest rate, and that's what we're seeing right now. So on the commercial side of it, like I said, people are saying that these balloon payments and loans coming due will crash the real estate market. So I actually talked to my banker about this as well, who refinanced this property. I wanted to get his opinion on it, and he kind of agreed with me too, which is always nice to have a second or third opinion from an expert agree with me. And doesn't happen that often. No. But there's a lot of problems with that argument, and we'll kind of show that with how I refinanced my property, this property. And here's the bank statement for when I refinanced this property. And I got a $175,000 loan at 5.5% interest rate in 2019. Now, here's where the first kind of misnomer comes from, in that interest rates for residential properties were in the 2 and 3% range back then. And a lot of people think that commercial properties had those same crazy low rates, but commercial rates aren't exactly the same as residential rates. You didn't really see those crazy low rates back then for commercial. Maybe on some really big properties, but for the most part, rates weren't that much different than they are now. And we'll kind of show you that with my refinance here, where there isn't this big, massive difference between what people were getting loans for back then and what they're getting loans for right now. And you can see my payment was $1,211 a month. This loan did not have taxes and insurance on it. I paid those separately. Taxes are very high on this property. Commercial real estate in Colorado has extremely high taxes, which is frustrating, but we have to deal with it. But just in general, I want to show you what this loan was like in 2019. Now, here we are, 5 years later, my loan is coming due, and some things to think about here. My interest rate's the same, 5.5% still, but my loan balance is $148,000. Now, that's important because if I were to refinance this loan, you could recast it at that amount. So say I had a 25-year amortization before, well, I could push out that 25-year amortization starting again. So I'm starting off with a much lower balance now. So even if I have a higher interest rate, my payment might not be that much higher because I've got a lower balance. So the idea that these payments are going to massively inflate and people won't be able to afford them is a flawed statement, because when you're refinancing, you're recasting these loans, you have a much lower payment or principal amount. Now, if they were interest-only loans, yes, you would have a much higher payment. I don't know of too many commercial interest-only loans, though. Pretty much most of them are being amortized, and most of them are a shorter amortization than residential. So you won't find very many commercial loans that have a 30-year amortization like residential properties, and you won't find too many loans that even have 25 years. A lot of them are 15 or 20 years, which means you're paying off way more of a loan, which means your payment will be even lower. So that's something to think about on these commercial loans as well. Now here we have my current loan after I did a refinance. And I want to mention too, my bank made this so easy on me. It was crazy. Is a $500 fee. That's it. I didn't need an appraisal. Pretty much didn't have to do anything special. I was able to refinance it at my current loan balance, and my new rate was 7.25%, which isn't that much higher than residential rates right now. And that's what I was talking about earlier, was sometimes commercial rates aren't as different as you might think than they were before. Because, residential loans were like 2 or 3% before. Now they're 6 or 7%. But commercial loans before were 5, 6%, and now they're kind of 6, 7%, not that much higher. And you've got to realize they're different types of loans, different products, and the rates are based on different things. Now my payment is $1,381, which is higher. It was $211 before, but it's not that much higher, right? It's 5 years later. It's $170 more. It's not going to break the bank. And with a bigger loan, yes, you'll have bigger payments, bigger differences, but it's still not that big of a difference in the loan. And I just wanted to show that for people who are worried about all these commercial loans resetting and unable to refinance and all these issues coming forward. For most people who've got loans, they've been paying off quite a bit of the balance. Their interest rates really aren't going to be that crazy different. And their payments probably aren't going to be that crazy different either. And it's not a massive thing to worry about, in my opinion. And I also mentioned that I talked to my banker about this whole situation. And I want to get their opinion on the commercial market crashing and what could happen. And they kind of said the same things I've been saying, that, you know, for the most part, commercial real estate is really solid. It's in really good shape. Prices aren't dropping for, you know, warehouse, flex space, small retail, shops, etc. But there are some spots to be worried about, and that's pretty much office space in big cities, especially certain big cities have some major issues. And they gave me an example of an office building, I think it was in Minneapolis, where it had been built or bought for $100 million, and the current owners couldn't sell it for like 10 or 15 million because so many people had moved out because of the political environment in Minneapolis, Minnesota. They couldn't find tenants, and that massively decreased the value. There you can see one of the crazy basements in this property that I didn't really know existed until I was in here just recently. And so the bank took that building back. And the owners actually came to them and said, hey, we can't sell this. We've been trying. We can't get it rented. We're going to have to default on our loan. And they went to the bank. They worked it out. They took back the loan. And that's a situation where commercial real estate could be in trouble. But that's a very specific, unique situation on a very small portion of commercial real estate. And that's not indicative of the entire market. Now, for the most part, you know, they said, the bank, you know, they said they don't want your real estate, right? And I learned this as an REO broker when I sold foreclosures and houses back in the housing crash. Banks don't want your houses either. They will take them as a last resort through foreclosure. If you aren't paying, if you won't do a deed in lieu, if you won't do a short sale, if you can't sell it yourself, if you won't work with them, yes, the bank will take your house if that's a last resort. With commercial real estate, they will take your property as a last resort. They want to work with you. They don't want your real estate. Banks don't know how to lease out commercial real estate. I mean, maybe there's some banks that own some buildings and can do it, but for the most part, they don't want to lease out your properties. They don't want to sell them. The loan costs and lawyers' costs and fees are going to be massive for those properties, and it just doesn't make any sense. Not only that, but if the banks foreclose on a bunch of properties and take all these properties, they're going to have a bunch of real estate they have to sell. If the banks are selling it and foreclosing, it's going to drop prices significantly. That means they're basically chopping off their own legs and reducing the value of these properties that they're taking. And they're smart enough not to do that as well. And I think in the last housing crisis, we saw that with residential too, where banks realized, hey, we can't just foreclose on everything and sell it at dirt cheap prices, or we're just chopping off our own legs and creating massive losses that we don't need to. And they worked with buyers. They tried to keep, or sellers, sorry, owners, with short sales, with deed in lieus, with all types of loan modifications and different things to keep people in their properties. And commercial banks want to do that even more, because I will tell you, it is way, way, way easier to sell a house than it is to sell a commercial property, especially a vacant, foreclosed on commercial property where the bank is not going to be doing tenant improvements or creative leases or different things that many commercial landlords will do to get properties leased out. And yes, here's the crazy weird basement that we've shown a few times. And there's also the crazy weird upstairs as well in this property. So basically my point here is that for the people calling for a commercial crash, one, the loans aren't as bad as people make them out to be because you can recast them. People are paying down those mortgages. The balances are lower. And interest rates aren't really that different, or there isn't as big of a difference as you might think based on 5, especially 10 years ago, as there is now. Banks don't want foreclosures. They don't want them. That's a losing proposition for them. They want people to keep their properties, keep them rented. They want to keep taking payments and keep those loans good. A bank would much rather do a loan modification, especially on commercial, and restructure stuff than take a property back and have to figure out what the heck they're going to do with a commercial property. Like I said, it's much different than a house, and house is easy to sell. That's not difficult. Commercial property, whole nother ball game. So I don't see a commercial market crash coming. For my commercial properties, there's been plenty of demand for leasing them, even for sales. Like I said, most commercial property is just fine. In fact, in my area, there's kind of a lack of warehouse space of big commercial properties. The problem is they've made it so expensive to build with all the building permits, development requirements, water requirements. It's just so expensive to build commercial now. They aren't building enough of it, just like they aren't building enough houses. Kind of the same boat. And that's just going to drive commercial prices up higher. And I think that's the same with residential too. Residential prices, commercial prices are basically, built on new construction, the cost of new. Should I buy existing? Should I buy new? Is kind of the question a lot of people have when doing commercial or residential. And a lot of people selling commercial residential is like, well, what's my house compared to in something new? Unless you're in a very depressed market where there's too many sellers, that's basically what your prices are. So when new construction prices keep going up, because development costs keep going up, building permits keep getting stricter, water costs keep going up, then housing prices are probably going to keep going up. And that's frustrating for many people. It's frustrating for investors too. I know a lot of people think, oh, investors want prices to be sky high. It actually makes our job way, way harder, especially for houses and renting houses out. It doesn't make sense for most investors to rent out expensive houses. It's a losing proposition. Your rent doesn't cover the expenses. It's way easier to make money to invest in cheaper houses. And I did much better on residential. I could make way more money per month on cheaper houses, and that's why I switched to commercial, because housing just got too expensive. So, crash coming? Probably not. Downturn coming? Probably not. Is it easy to refinance? In some cases, with some banks, yes, it actually is pretty easy. In other cases, maybe it's more difficult depending on the property, the cash flow, what's going on. But I want to show my experience and what's happening with this property, how we refinanced it. And I did promise you the upstairs. So here's the weird upstairs at that property as well. And there was a second basement too. This was a very interesting property. Some people said it might be a cool restaurant, pawn shop, thrift store. I agree. It would be a really cool restaurant with some different kind of cool seating areas and different types of buildings and levels and all kinds of, interesting stuff. Be expensive to put in the kitchen and your ADA bathrooms and all that, but it might be worth it. And I say that based on me selling it and hoping someone watching this is willing to buy it and put a restaurant in. All right. That's the property. That's my view on commercial real estate. Am I biased? Of course I'm biased. Everyone's biased in some way, form, shape, on pretty much everything. But I have a lot of experience in real estate. I've been doing this a long time. I try to be a realist. As many of you know who watch my channel, I might be too real and too honest for my own good when trying to sell properties and do different stuff, but that's just the way I do things. So let me know what you think. If you have any ideas, insights, different information on commercial properties, welcome to hear what you think. If you have different stories on particular commercial properties that maybe had some crazy loans or different stuff going on, love to hear what you think on that too. And we'll be back with more videos on our flips, rentals, businesses, the liquor store, the laundromats, our flips, all of that coming up soon.